Hello and welcome to the Trading Zone. I'm Joe Teague, Portfolio Manager at Equity Armor Investments. It's great to have you here as we have every Monday, 1 Eastern. Hope you're having a great start to the week. The market's having a nice start to the week as rebounding from Friday's mini sell-off. I'm going to get into all that again. Great for you all to be here. Hopefully Brian will be joining us soon. As we get into it all, remember, I'm live here. Love feeding your questions. You got anything that comes to mind, put it into the chat. I'll be happy to talk about it. Happy to talk about really anything. If you anything around the world, if you want a little bit of my specialty, though, you asked me about stocks, options, and VIX trading, of course. That would be what we'd love to do. Today, we're going to be talking about NVDA, their earnings. We got a lot else to cover, too, when it comes to volatility. I think Brian is hiding out this morning because he doesn't want to talk about football, which is what we usually do at the start of a show. And, oh, man, poor Bears. Poor Bears. They just can't buy a break. Before we get into the big show, let's just talk about some stories I'm seeing out there around the world. We're seeing bankers talking about a big AI payday coming forward, how they're going to be making money. And of course, I think there's going to be some more IPOs coming out soon, more private capital as it's talking about here. But yeah, I think that we'll be seeing more and more of this. This is something with this AI like bubble that people are talking about, which hasn't really reached that next level, the level of mergers, acquisitions, IPOs, which is what we know the end of the dot-com bubble for. We've not even reached that spot. We're really at just like these big semiconductors, these big mega cap, the Mag 7 are spending on AI, and companies that have a ton of revenue, cash to spend, are spending on AI. And of course, the semiconductors are profiting. NVIDIA being the big one in a big way, profiting on the AI. So that's kind of where we are here. For me, we're getting in the spot now. We had this little mini rally after the election, and we had a little bit of FOMO, some call buying this morning. We get more of that big bounce in Tesla again, and we got Bitcoin up over 90,000 as well. So yeah, we got a lot of action going on here. Brian, how's it going? Happy Monday.
Yes. Obviously so much action going on in the markets. Thanks for bringing me in here, Joe. It's been a wild ride, right?
Yeah, it's been a wild ride. Can you believe, the election's not 2 weeks ago?
I know. Apologize. Still getting over a cold cough that everybody has this time of year. Customary for the Thanksgiving go around of flu symptoms and cold symptoms and whatnot, but dealing with it.
Yeah. Yep. Again, I'm just going through some stories to get the show started. We got a big show for everybody, just so you know, if you're just tuning in. We're going to be talking about NVIDIA earnings in a big way. Of course, we're going to be breaking those down. Can't wait to get into that. A lot of volatility, a lot of stock talk before we get into that. We'll be talking AI names as usual as we go through here. These are just stories I saw this morning, Brian. I thought they were interesting. Of course, we got long-range missiles going to Ukraine. This is going to, of course, ratchet up the geopolitical tensions. Doesn't mean anything for our stocks. Well, I think the end of the world is bullish until it isn't. So this will probably just mean more defense spending, another round of that. The ideal situation, of course, is that there is some sort of peaceful solution. But is there some sort of magic wand that can be waved to the situation? I don't know.
Well, yeah, I mean, we've pretty much been in this proxy World War III since COVID started, and China let the COVID escape from their labs, and it's been ongoing once Russia attacked Ukraine, and then we have the Middle East tension. So these things are ongoing. I don't know if it gets resolved anytime soon, but it's something that's, increased volatility in the marketplace. And speaking of that, maybe we should touch a little bit about what's going on with volatility, because I think viewers are going to be interested to see how things sort of shape out for the rest of the year into the Christmas time and end of the year.
All right, well, let's do it. We talked about the stories leading into the week. We gave Brian a pass on his Bears because he came a little late. We decided not to talk about football. And let's start the show. So I'm Joe Teague, Equity Armor Investments. This is the Trading Zone. We're live every Monday, 1 Eastern. Brian and I are two former options market makers. 70 years in Equity Armor Investments have 70 years experience when it comes to options trading, and a true specialty in the VIX. Brian was an early adapter to VIX trading, one of the first market makers to enter the VIX pit, and really had a lot of success with it.
Yeah, and so as we get into our show here, we really want to jump right into it, talk about the key events this week. We're going to give a trade on NVDA. Obviously, that's the big news, and that's almost the big story as well. So we'll have a trade there, and we'll talk about what that means for the semiconductor industry and semiconductor sector as well.
Yeah, so as we do every week, we talk about the skew. This for us is really a leading indicator when it comes to the VIX. This, of course, measures the difference between the 25 delta put volatility in the S&P 500 and the 25 delta call volatility in the S&P 500. We were saying last week this was looking like we're hitting the bottom end of this channel here, Brian. Looking a little low here, and sure enough, we got this bounce here, and yes, a little bit of sell-off in stocks and some return to volatility.
I think it's interesting that trend line at the bottom there, that as soon as call buyers came in and took the skew more flat, we sort of hit a level where we're still in this trend of higher lows now, where there's some interest in buying some downside puts once things still get a little bit too overly bullish.
Yeah, this was FOMO, and it's so interesting. It happened right on options expiration. A lot of calls were being bought after the election, just evaporated into nothing. And now today we're getting the rally is resuming. Unfortunately, if you have that FOMO, the timing can be everything, and that was just really rough.
Yeah, and one thing we did for clients is we rolled any calls down as the market sort of sold off. We rolled those down to a lower level to just re-up, because they've gone so far out of the money. Anybody trying to chase to the upside with an out of the money call for leverage, like you said, that's evaporated to near zero. So you'd probably I'd be looking to reinitiate any call buying if the sentiment is still to the upside.
Yeah, that's another reason. Just pay attention to the options calendar. When you have this FOMO going on, that is very tricky. Here's the VIX futures curve. Last week we were just saying, wow, this really came down in a big way. And yeah, it did. Now we're back up here. I think this is a little bit more realistic. I think this is kind of where we should expect to see it. I know we're going to have the holiday season coming up. The year end December into January is usually a seasonally low time of the year, but it picks back up right after that into February. You start to see volatility heating up in a big way. So yeah, I think we're finally getting what we expected back to the election, and we should once we turn the year, get into January, we should see a curve that looks more like that. So we'll see if that happens, but that's what we're looking forward to.
Yeah, and I think the pop-up and curve, like we talked about it last week, that there'd be some return to mean reversion to where volatility was before. That happened last week. We were buyers of VIX futures early on in the week, and we sold out of that position after we got this sort of pop, because now I think it's kind of in that middle normalized level.
Yeah, it's amazing when a plan comes together, isn't it?
Yeah, for sure.
Yeah,
had to be a little patient with it. It went in our face for a day, but then the vol pop came.
Yep. And the skew was just telling us that it was. This is a chart I've been stubbornly sticking to, even though it seems like it's out of place. But yeah, this trend line, this was support for a second. It's now become resistance, and we're having just trouble getting this rally get back up above 6,000 here. I think if we stay underneath this trend line, it's still totally fine. This is still a very bullish chart. Really, if you kind of break it down and we look into like a shorter time period, we had this fantastic head and shoulders pattern here, Brian.
Yeah.
And if you look at the trend line here, if you look at the dip here, this 380 points. Well, we actually basically exactly matched the 380 points on the rally. So it went right to the target on the head and shoulders, which was really interesting. Now the question is, okay, can we consolidate here? Can we stay above these levels? And then, as we, correct with time here, can we make a new high above 6,000?
Yeah, and I think as you go through a consolidation period, one thing I like to do is buy the dips and sell the rips until the consolidation is done. So, look for those like 1% or so more moves in the market, and those might be good opportunities to take the opposite side.
Well, we got a new high in the NASDAQ too, following election. Of course, it fell apart at the end of last week. So just something to remember here. We got this bull market, but we absolutely are seeing volatility in the midst of it. You take a little bit of a shorter look here on the NASDAQ, just on like a year to date. Looking, everything is fine here. Recent volatility, of course. One thing I found really interesting, Brian, though, on the year-to-date chart is how closely the Nasdaq and the S&P are moving together. A little bit more beta, a little bit more movement, of course, in the Nasdaq on these moves, but it's really following very closely over the past year.
Yeah, I mean, if you're want to geek it out with mathematics, the Sharpe ratio on the S&P is better, right? Because you've had the same kind of return with less volatility along the ride. That's what we do in our mutual funds and for client accounts is risk management. The S&P has been a risk manager for the Nasdaq so far this year, but we still are a believer in AI plays and whatnot, and those certain specific parts of the Nasdaq have really played out well this year.
Yeah, and I think we're going to get into this soon. We're going to look at the SMH next, and then, of course, we'll be talking about NVDA for our big story. But here's the Nasdaq just over the last month. Of course, big run up on the election bump. We lost like most of that at the end of last week. So nice little recovery today. Really, we're still kind of stuck in no man's land. Was that kind of FOMO blow off top post the election? Is there something else we're missing, or it's just kind of like buy the news, sell the rumor? Now we're kind of going to figure it all out as one.
I think if you look at that chart, I think you can. I would be a buyer of the Nasdaq with a tight stop, right? Where tight stop at that breakout level, call it 20,000, maybe 20,200 right there. So I like owning the Nasdaq right here. Have a tight stop. If it breaks below, wait for the rip through 20,000. Like I said, buy and then maybe jump back in after you get a maybe 1 or 2% downside move in the Nasdaq after that.
Yeah, as I said, we're going to look at the semiconductors next. Trust me, NVIDIA is coming really soon. The semiconductors right here, same pattern here over the past 3 years. Just obviously they've been the best over the, since the low here in 22. But lots of volatility, lots of choppiness here, some uncertainty going on here. Is this just, normal, choppiness within this rally, or something else going on?
Well, I think when you look at this index, the thing here, right, NVIDIA is in the SMH, and that's obviously been an upward driver in the semiconductor index. You look at names like Intel, which has performed actually very well in most recent weeks to help drive the SMH higher. But I think there's areas that people are worried about that might be losers in the semiconductor sector that are not participating in this whole AI play and technology revolution. And so I think that's why you're getting some back and forth uncertainty in the index itself, in the sector itself.
Yeah, I guess you're right. For me, here's just looking at it on a year to date. You could still make the case that we're potentially just making a big cup here. We'll see. This is going to be make or break on NVIDIA earnings, of course. Just because we made a little bit of a lower low here last week isn't fatal. It's not good. I'll say that, but it isn't fatal. Just be watching it very closely.
Yeah, I would say for me, really look at the 260 mark for the sector itself, right? If I want to be a buyer of the semiconductor sector as a whole, I want to see this sort of breakout out of this cup formation before I get in. Until then, I would be more specific towards names that we like NVIDIA and Intel, like I mentioned, that we own for clients, that are a little bit more specific to situations that we think are beneficial to the current, environmental conditions. And so as a sector as a whole, don't love it yet. Stock specific inside the sector, I do love.
Okay, here we go. Finally,
Yeah.
let's get into it here, Brian. We got NVDA. They got earnings coming up, and everybody knows the story, right? We're just looking at a stock, that has just been one of the best in history. Like, it's grown to the largest at times, if not the second largest company in the world. Just absolutely exponential growth here. What are you thinking for earnings? What are you expecting to see?
Well, obviously for earnings, NVIDIA has different components to it, right? There's one is the whole cryptocurrency play, two, the gaming play, and three, obviously, artificial intelligence, generative AI play. When you look here, and I'm looking at earnings, implied move of about 8%, which is higher than normal for the past few earnings. If especially you look going out, down 6% the prior quarter, up 9 and 16, and then you had a 24% move to the upside. So it's not, abnormal here for people seeing the upside moves that the stock has made in the past to, maybe overbid a little bit for option implied volatility here and pay up to maybe own the upside in NVIDIA with the fear of missing out, right? We talked about this earlier in the show. They make a big move here, over 10% to the upside. Traders are going to want to own upside calls in NVIDIA.
Yeah, and but these upside moves they're so kind of, for me, they're so important for like the overall market. You look at this, you got like Fab of 23.
Yeah.
Just we know what's going to happen in the market. Then you got Fab of this year. So when NVIDIA is doing good, the market's doing good. I think that's why this is really crucial report for the fourth quarter. Do companies have money left to spend? Are they still spending on these data centers? We'll wait and see. Here's a look at their PE ratios. They're not as high as you could have expected here, Brian. Look at our forward PE of 40, a trailing PE of 65. So that's high, but it's like it really could have been much higher. So for me, we've done some of these trades in the past. I'm going to walk you through it. It's going to be a stock replacement trade. There's a lot of risk in owning NVIDIA. We've seen it can have a 10% downward move, but here's what I'm looking forward to for the earnings play. Of course, I want to see this revenue growth continue. This just astronomical growth. People just piling into these data centers, and they're really coming with their big, massive data center pieces. The Hopper, they have the hardware, they have the software that goes into it. It is a crucial component. You can't really do the AI without it. We know Intel's trying to get into that game. They're behind on the chips. They're behind in both ways right now. So really nobody can do it like NVIDIA right now. So how many are they building? How many are they going out? Is the data center business boom going to continue? We know the gaming segment is good. It's for me, it's not driving this astronomical growth. It's going to be there. If they miss on gaming, it doesn't really matter to me. I'm really mostly focusing on this, on how many there are other big GPUs that they're selling. So we'll wait and see. So let's take a look here at this chart again. I put in a retracement level here. This was in June. This was the run up. They had that big reverse split, right? They split and they ran up into it. And we had a big correction here, went down $37, $35 here. So I think it's actually reasonable. They have a target of $35 above there. That'll put it up about to 170, Brian. And this is how I'm designing my trade. I'm expecting 170 is kind of like my top here. I think that'll be the next layer of consolidation. So I am looking at look out into March. I'm going to buy the 140, 170 call spread. I'm going to sell the 126 put. I'm going to pay 30 cents. Now, this is effectively like zero for, such an expensive stock. So it's paying 30 cents. I'm going to keep that money in cash rather than stock. I can earn interest on it throughout now until March expiration. And I'm going to participate from here on to the upside all the way up to 170.
Yeah, I mean, that plays out perfectly from a technical standpoint. That's how I like to draw out option trades is use some technical charts to pick the strike prices. Use bullish or bearish sentiment when I have a fundamental, basis behind the stock. So I really like this trade. I think it plays out well. One thing that we're going to be doing coming up here, if you go to equityarmorinvestments.com, on our website, clients now are able to sign up coming up starting, I believe that we're going to launch this next week, Joe, where they can actually get fed this type of trade structure alert to them. If you have certain accounts at certain broker dealers, it can help you just pull up a trade ticket and execute on that. And for the low price of less than $30 a month, people can get this information, and not only will in case you missed the show, get the trade. Joe or I will update the trade when it's time to get out of it, and you'll get an alert on that. So I think this is an exciting thing. So make sure, next week, go to equityarmorinvestments.com and check that out. There's some discounts there too that'll be had if you open up a Tradier account. So we're kind of excited to offer this right at a time when this NVIDIA trade is taking place, because I love this trade from a risk reward. The technicals are lined up where this is a better way to own NVIDIA rather than owning the stock outright. For those that want leverage to this, maybe it's a good way to even use a little bit of extra leverage. Instead of 100 shares of NVIDIA, you buy 2 of the spreads. So certainly this makes sense on a risk-adjusted basis.
Yeah, risk-adjusted basis, if it goes above 170, it kind of capped out here. You're not going to make more than that. I think I am okay with the 25% gain for the next 5 months here, or 4 months. So I would be absolutely thrilled with that. And also, it kind of cuts my risk off where I don't lose money basically down to 126. So I personally think this will be support here, this line. If it's not, I would love to buy NVIDIA down here at 126. And if it does fall back, I get to do just that.
Yeah, exactly. So, it's got a level where you like to own the stock. I would love to own the stock down at that level too, 120. So I like the trade. Again, follow us through our website, and follow us on Twitter, or, view this show on YouTube at Equity Armor. We will continue to update this. And as we have this new offering, people that can subscribe to these trade ideas, it'll be an awesome way to get signals on when to get out of this trade. Or maybe we'll continue just to hold it till expiration if things go really well. Or maybe a trade for the next step if it blows through that 170 on the upside. So in any event, I'm Brian Stutland here, portfolio manager at Equity Armor, bringing it to you. Joe, obviously leading the show all the time for us here. So make sure you tune into Joe Tigay. Follow him on Twitter as well, or myself at Brian Stutland. And we're here every Monday, 1 p.m. Eastern time, on the Tradier Hub, and sponsor the show, sponsored by the MyX Trading Zone. We'll see you next week.
Have a good week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.